Good afternoon, everybody. How's it going? Been a little bit. Yes. That's because I'm currently working on my own course. You can see my Discord down below if you guys want to check that out and join that. I'm way active in there. I try to keep up with everybody, and I also do lives on a daily basis, aka Zoom meetings with the group, and we chat and discuss things and kind of discuss the market and direction. I'm going to be doing that 6 days a week, so if interested, please do so. I would like it also if you could like, subscribe, and go ahead and hit that notification bell, as well as the thumbs up button if you like it. And if you don't like it, you can always do the thumbs down. That always works also. We're going to kind of run through the market, see what's going on, as well as start this meeting off with the Fed rate meeting that is currently coming up. The FOMC will be on Wednesday. By the way, I will be doing a live on my Discord for that. We're going to discuss what the expectations are, what we think is going to happen, and kind of where we see the market going moving forward, as well as a few other things as far as what will happen after the current midterm elections and what I see kind of foresight wise as far as market wise. All right, so Fed seen raising to 4% in 2022 and signaling higher for longer term. So what this means is that the Fed is looking to raise rates up to above or at 4%. We'll say Fed rate hike by the end of 2022. This means all combined rate hikes should be at 4% or higher by the end of 2022 going into 2023. This means we are probably looking at more Fed rate hikes, not only this month, but on the next FOMC in addition to this month. This pretty much spells for more downside. We will see some ups and downs in between. There'll be some sides and some rallies into some failed rallies and so on and so forth and all that good stuff. These things will be happening in between. Nothing too exciting. I'm expecting possible pivot around the middle of 2023, towards the end of 2023, going into 2022 or 2024. Sorry. That's what my expectations are for right now, and we'll discuss that moving forward also. So economics consensus is the 75 basis point hike, which will be obviously at the time of this thing, it was next week, which is now this week, this Wednesday. Rates seen staying at peak in 2023 as Fed battles inflation. Now you're probably like, why would this even be a thing? Why would they raise rates? So on and so forth. We had a positive month in the month of July, right? We had inflation go down. Well, if you look at the CPI data actually points to that inflation actually went up in the month of August. This is why we should not get overly bullish without consecutive months of positive inflation going into deflation, right? We want that deflationary environment. We want inflation to come down. That's basically it at the end of the day. That's the whole purpose of the Fed. That's what they're trying to achieve, and that's what we're trying to get to. So if inflation went up in August, it simply means that July was more or less just a retrace into a further move to the upside. Not good things at all. The market, I think, has priced in the 75 basis points. I do not feel that they price in 100. With inflation going up, there's a possible pretty good chance that we could see 100 also. Do I think 75 is more likely? Yes, but there is always a chance that 100 could come in due to the fact that inflation went back up. We have to keep that in mind. All right, Federal Reserve officials will signal a more hawkish stance next week, with interest rates reaching 4% by December. That's their ideal range, right? 4% by December. So if they do 75 this week, that will be 3.25%. And for them to achieve the 4% they're trying to achieve, that would be another 75% rate hike in December. So keep that in mind. And staying high through 2023. Economists surveyed by Bloomberg said the Federal Open Market Committee will raise rates by 75 basis points for a third consecutive meeting when policymakers announced their decision at 2 p.m. in the Washington Wednesday, the survey found. That would lift the target range for the policy benchmark to 3% to 3.25%. That means that their actual position on the market at the time was they were trying to achieve a 3% rate hike by this month, and they are now raising that bar to 3.25, and that would allow for their 75 basis point hike. And then for them to achieve 4%, they will be looking to do another 0.75% hike in December moving forward. That would mean more downside for the market, more bearishness for them to achieve that percentage. by the year end and edging higher next year before cuts in 2024. Now take it back to 3.6. Now keep in mind, they are not saying the pivot will happen until 2024, 3.6%. This means that most of 2023 will be very bearish. There will be a lot of sideways, a lot of chop, a lot of false rallies. We just have to kind of void out the noise and look for the entries, the solid entries. Such a shift represents a big step up from the Fed forecast. It's a huge step up. 0.25 from 3 is really big, a lot bigger than a lot of people think. Fed forecast in June, reflecting a tougher fight against inflation, which means inflation is a lot harder than they thought it would be after August core consumer price growth came in hotter than expected. The survey of 45 economists was conducted September of 9/14. Okay, so front-loading rate hikes. Economists see 75 basis point hikes, half points move in November. Okay, so expectations are we will stay high, guys. Look, so we got the November hike, and then we should see our September, October, November, and then December, and then in 2023. So right here's December, right? So if you look here, they're saying the hike will be 4% here, 3.8, and 3.3. This is their expectations. Their July was surveyed much lower. See right here, 3.5, 3.3, and 3. So they've gone up substantially from what they originally had forecasted here on the overall. And if you look here, they plan on staying high for quite some time. They're going to stay over their forecast all the way through. Chair Jerome Powell has said the Fed is strongly committed to getting inflation back to the central banks at 2% target and won't stop its fight prematurely, which means there will be no early pivot, guys. There will be no early pivot. That's basically what he's stating here in the face of weaker economic data. The case for more aggressive action has been solidified by Tuesday's Consumer Price Index report. So that's pretty much sealed the deal, which showed measures of underlying inflation rising more than expected. We expect the Fed to continue hiking until realized inflation prints come down, with the August CPI release adding substantial urgency to the Fed's task. Again, substantial urgency, said Robert Dent, senior U.S. economist at Nomura Securities International Incorporated. The longer inflation stays elevated, the more concerns of wage price spiral and inflation expectations on anchoring rise. So wage price spiral just means prices and wages continue to rise and rise and rise, in which case creates more and more spending, in which case keeps inflation rising and rising and rising. This is not a good thing for the economy. What Bloomberg Economics says, the dot plot will show a higher terminal rate in 2023. We think it will go up and around 4.2%. So this is what their expectations are for 2023 moving into it, compared with the 3.8% in June, September, right? Also, the decline in 2024 in rates wouldn't be as steep as in the June September meeting. It might show a decrease to 3.8% or 4% in 2024 compared with the 3.4%. So they were actually planning on pivoting to 3.4%. They've now increased that number to 3.8 to 4%. So they're not, basically our pivot's going to be a lot worse than what people are thinking, right? This is something really big. Anna Wong with chief US economist. Powell has been vague about how my interest rates might go, and in July said the Fed would make policy meeting by meeting. That makes the FOMC dot plot forecast of the largest rate and a primary focus for investors when the committee meets September 2021. Powell will hold a press conference Wednesday, 30 minutes after the policy decision is released. The rate path, which economists expect for the FOMC to lay out next week, is less aggressive than the one foreseen by markets. Investors fully expect a 75 basis point increase on Wednesday and see rates advance a further percentage point by year end to around 4.23%. This means that we're basically over a percent over projected numbers for what the Fed was trying to achieve. The Fed was trying to achieve 1% less, and now we're going to be 1% over that, his original projection, which means the Fed is behind the ball. They dropped the ball on this. They're definitely behind. They're trying to catch up. That's basically what's going on. Fed swaps price in 4.5%. Policy rate peak. The economists' own forecasts largely match what they expect from the Fed's summary of economic projections, with rates peaks in December at 4% in December, then declining in 2024. So again, they've said multiple times, multiple different economists, multiple different places have all said they see the pivot happen around 2024, guys, not 2023, not 2022. Trying to pre-project a pivot before anything is even saying pivot is not a good thing. Don't try and do this. You will get wrecked doing this. You'll buy the middle of the market. You do not want to buy the middle in the type of downfall that we're looking at. Powell is trying to steer the economy towards a softish landing or of slower economic growth. Again, softish, right? This means hard but soft. These words are hilarious. A still robust labor market, again, still robust labor market currently, and weaker inflation. That will be reflected in FOMC forecast for growth of just 0.5% in 2022 and 1.4% in 2023, and both with big downgrades from June, with unemployment rising, robust labor market, rising unemployment to 4.2% in 2024 from 3.7% reported in August, according to the survey. So they expect for people to become more and more unemployed as time goes on, as they're trying to fight this inflation. Keep that in mind with savings and so on and so forth. Don't be gambling away your money during a time that you may need it. FOMC may project slow growth, higher unemployment, below trend. Growth is Fed's goal to reduce price pressures. Policy remains focused inflation with little evidence of being responsive to slowing economic employment data or declining rates of inflation, said Hugh Johnson, chairman of Hugh Johnson Economics LLC. Inflation remains the central issue driving Fed policy. The FOMC is likely to maintain its forecast for the price pressure and may project inflations of 5.2% for 2022, 2.6% for 2023, and 2.2% for 2024. That would mean missing the Fed's long-run inflation target of 2%. It means we will not achieve 2% by 2024 like the Fed originally anticipated, which means they may amp things up somewhere in between here to try and make that happen. Powell has emphasized that means maybe a possible higher rate hike and somewhere in between than people are expecting. Powell has emphasized that the central banks will be nimble in its rate hiking plans, and the FOMC in its prior statement offered only loose guidance that ongoing increases would be appropriate. Three-quarters of economists expect the committee to repeat the guidance, while most of the rest say the FOMC could say it expects the pace of hikes to slow, echoing Powell's recent public statements. Two-thirds of economics also expect a unanimous decision this month, with the FOMC keeping a united front behind Powell's fight against inflation. So far this year, St. Louis Fed President James Bullard has dissented as a hawk, and Kansas City Fed President Ether George is a dovish direction. There's less certainty around plans to shrink the Fed's balance sheet. The level at which maturing securities are allowed to expire ramped up this month to an annual pace of about 1.1 trillion. Economists project that will reduce the balance sheet to 8.4 trillion by the year end, dropping to 6.6 trillion in December 2024, according to the median's estimate. Almost half of those surveyed say officials will resort to outright sales of mortgage-backed securities. Again, mortgage-backed securities getting sold off, guys. Mortgage-backed securities, in line with their stated preference to only hold treasuries in the longer run. So they're only looking to hold bonds. All right, treasury bonds. Among those expecting sales, there's a wide range of views. So that means that basically mortgage-backed securities will have issues for funding, just FYI, which means it's going to be much harder to get a home. Among those expecting sales, there's a wide range of views on when selling would begin, with a slight majority seeing it starting by 2023 second quarter, right? This means we probably won't see any type of positive price action until third or fourth quarter due to that sell-off causing more fear in the market. Wall Street economists have continued to raise concerns about the potential for recession as the Fed tightens monetary policies amid headwinds, including higher food and energy prices amid Russia's invasion of Ukraine. Recession coming. Economists see a hard landing with a formal recession or a period with zero or negative growth. So right here, 49% of economists are saying recession, 19% are saying soft landing, and 33% are saying hard landing, but not a recession. So both of these are negative, but the majority is on the recession. Don't fall for the BS, guys. Like, you got to keep it real. Higher for the longer inflation, more aggressive Fed monetary policies, tightening and negative spillover effects from weakening global backdrop will combine to push the U.S. economy into a mild recession, aka a recession, in the first half of 2023. That's why the first quarter, dude, you're gonna get wrecked. You're gonna get wrecked just like the first quarter of this year. In our view, said Oxford economist, chief U.S. economist Kathy Boschankic. I hope I didn't butcher her name. Economists were mixed about the outlook, with the 49% seeing a recession as likely in the next 2 years, 33% seeing sometime with zero or negative growth likely, and rest looking for the federal to achieve a soft landing of continuing growth and low inflation. All right, so we got the chatter. Guys. All right, so September. Lots more information here. We're probably not going to run through it. Fed to battle inflation until job is done. AKA, he's not backing off. No pivots. Get it out of your head. All right. Current FOMC meeting, which will be occurring in literally a day and some hours. Okay. So with this FOMC meeting, this is going to be a big one. Look, 82% are basically stating that they are looking at 50 to 75 basis points. This means if we see 100 basis points, it will be very bad. 18% are saying 75 to 100 basis points. So, which means that is something else to look out for, right? So that means that if we end up with 100 basis points, 82% of the market may start dumping. If we end up with 75 basis points, 18% of the market may start buying. Do you guys do the math here? Do the math. There's buying power. But there's also a lot more selling than buying. Look at the numbers. So you'll get some upside if it stays around 75, but you'll get heavy downside if it's 100. And again, it will be leading into the next FOMC, which will lead to more downside. All right. With that being said, market rally tacticians, dead slowing economy, earnings expectations, Fed week. This one's pretty good, but we're not going to run through that. Reuters forecast for the Fed terminal rate hits new highs, shaking stocks and bonds. We already know that. We can see right here their anticipated curve versus where they're currently going as far as their curve. So that curve is now increased. The Fed is now upping the ante on what they originally said and not really following through what they discussed. All right, with that being said, that's going to cover all the normal news stuff for the FOMC. Let's kind of run through the charts a little bit, look and see what we have going on. Oh my gosh, so much stuff. I know. All right, so we'll just clean this up. No point in doing all that. We're just going to redraw everything. All right, let's run through. We got our top line right there, our resistance. We got our bottom line right here, our support. And what we're looking for here is we got the broadening wedge, right? Broadening wedge. We got the move down. We're going to kind of follow that. Market's bouncing back nicely right now. We could see some pumpage here. RSI and everything like that's still kind of meh. If you look here, we got the middle, right? Price is moving, hovering around that middle. And that's currently where we are right now. Now, price, you can see mostly hovers around this middle. Partially hovers around the lows and the highs. Where you're looking to get in is the key lows, right? Your key lows. And if we get back down here again, another key low, or you're looking to short the key high, right? Those are the areas that you're looking to make really good profit on, scenarios that make sense. Now, keep in mind, this is not financial advice. I'm just giving you guys the reality of things. So riding wedge is not too difficult to understand. Pretty easy to see. Overall, I was looking for, and the market rallying is actually hilarious. We can see the pump right here, right? That's a really big pump. RSI still kind of low, stochastic facing up. So we could see some decent upside. It could try to come back up, recapture this drop, right? And then after they recapture the drop, they could get shut down again, or they could continue through. MACD looks like it's starting to curve, which is also good. So we could see some upside, but we're getting tighter in the MACD, so I'll be really careful. You can see right here, price is starting to tighten here at the end. We're getting less volume, so on and so forth. RSI sitting in the middle of the range, still under the 50. That's bearish. So like I said, we can see a ramp up, and then we can see a rejection, or we can see a ramp up and out continue through, and that would just bring us back to our highs. That would bring us into our W formation. So I'm looking for 2 plays here on Bitcoin. One being strictly moving around this. So I'm looking for the W formation here, which we pretty much got the double bottom into here into rejection, right? And if that happens, that's going to be pretty bad. So ideally, we're not looking for this. The other scenario here would be here, into here, into here, and then maybe a little bit of pumpage, right? And then we just dump. And that would be a build short structure, and that would be very bullish for me. Then I would expect them to kind of work their way out of this, and then, you know, possible breakout on that bullish structure. So I'm looking for a deep move on this, or I'm looking for a higher move on this into a rejection. So that 28K, 30K zone is what we should be looking at for upside, and downside would be roughly around 14 to 10K. All right. Let's head over here to the S&P. Let's check it out. Decent little bounce, nothing too crazy. Still in that downtrend. We're on the monthly here, so you can see everything playing out. S&P is just free falling, guys. Like, this thing's ready to just drop. I think we're going to be looking at a massive exit relatively soon on a lot of assets. We are getting a short squeeze, or we're getting a short squeeze on electric vehicles. It looks like that's going to die down a bit. Let's check out Sol. Where's Sol at? So Sol's still following trend. You can see the uptrend right here. Hit, bounce, hit, probably back up to the top right here, the $44 zone, and then I'm expecting a huge dump. You can see right there's the move right there. Home ag, this is basically housing. Nothing crazy. Walt Disney, we'll check out Disney. All right, so Disney's good. Disney's coming back up for the retest. Might fill in the fair value gap here, and then I think we're gonna dump down again. Amazon, similar situation. Amazon has hit its low, kind of recovering, probably come back up, hit again, and then drop. We come over to S&P. We already know what's going on there. This one, guys. Oh, they might recover some of this, but this, oh my gosh, Adobe's going. It's going to 205, guys. This is insane. It was at $700. I can't believe this company is going this far under. Yes, we are doing it. We got above resistance for the 2 year. Now we'll probably pull back a little bit, and then we're gonna go 5.28, guys. 5.28. Keep an eye. I'm buying some bonds. Not gonna lie, buying some bonds. All right. Tulip going down. Twitters. A little bit of rally. Not much price action. Continual uptrend. Breakout top. We could see some upside. Ultimately, I think this thing's done. Let's see. Yeah, that's a rising. That's gonna break down. All right, let's get into oil. Oh, oil's rallying. Nice. Oil looks like Bitcoin right now. Look at that. Dead on Bitcoin. This is looking good. I think oil's gonna move off of this, guys. Like I said, I got the circle right here. I think we're gonna kind of round out here. BNB. Yeah, BNB's got some rallying room, but really BNB's got a lot of downside. A lot of downside. I wouldn't be touching that. Shopify. Yep. Just huddling around this consolidation zone. Shopify to me, guys, like I think it can come deeper, but it's a buy. This is a DCA. Definitely a DCA for Shopify for me. I think it's a solid company. Let's see here. 10-year. 10 years rallying. Okay. I'm looking for that 4.136. Base style support over here. That's what I'm looking for right now. Like to see a breakout there. YFI still down. Big rally, but still down. CNY, Chinese yuan against the dollar. We hit resistance. Look. Look at it. Look at it. Good and go. Good to go. Coming back down for the one. Dot. Yes, dot still. Okay, dot hit its low. All right, we're looking good. $6, roughly what I was thinking. Dot may come back up to 790 and drop again. Let's put thoughts on dot. XRP. So XRP is when money is moving in XRP, be careful. And look, I show you guys right here. We're gonna consolidate here for a while. Okay, gonna consolidate here for a while. But I think XRP is coming lower for sure. I got it sitting around 14 cents. 10-year treasury. Yeah, we're still inverted on the 10 and the 2. Very bad. So keep your eyes on that. That's still negative. Remember that the crash typically doesn't happen until after the inversion. Bitcoin. We got the drop right here coming up hitting the center. I already showed you guys this one. AMD. Looks like it's okay. Building long structure. Good. Could swing up to this $100 and then just drop. Beyond Meats. Yeah, this. Ooh, yeah, they're getting destroyed. Oh my gosh, don't buy this at all. YFI, not financial advice, by the way. I don't give financial advice here. YFI looking good. YFI is under resistance. Actually, it's gonna drop down. You can see right here. Look, see right there. See right there. This is gonna come back. Under resistance or under support. Sorry. KNC no. Let's check out Hex. Hex is looking kind of like Bitcoin. Bounced right out the lows. Look at that. Beautiful. Bounced right out the lows. Coming back up. Probably, I don't know, not that high. 0.0357 or whatever. What I'm thinking. If we come over to Neo, a lot of these electric cars have been short squeezes. I think they're working their way back up. 33.27, and I think they're gonna hit the short squeeze, and then they're gonna long squeeze everybody out again. Hollow. Nothing interesting there. ApeCoin. Yeah, ApeCoin's building. It's building long. Let's see what the RSI looks like. Yeah, we had to turn reversal down here. And look, we hit right into where I said we were gonna hit. Look at this. Boom. Look at this, guys. Look at this. Perfect bounce right off of there. Perfect bounce right off of there. Look at that. Boom. Shift away. All right. Let's move into Kyber. I just love seeing that stuff play out, guys. I'm not trying to like post or anything. Kyber's coming down. We're gonna hit this low of 126. We're looking to get in Kyber. Tesla rallying with the markets. Again, nothing too crazy, guys. Still hitting up resistance. We've done this before. Look, 1, 2, 3, 4, 5 days over here, right? I expect we're gonna sit up here for a while and hover, but I don't expect a full-on breakout for Tesla. CRV way below. Nothing good there. Let's check out gold. Did gold fall back into the? Yes, it did. Nice. Okay. Gold's kind of bouncing here, but it's under support, under resistance. So gold will probably fall back. All right, let's check out the VIX. VIX is dropping back. That's good. So we'll probably see a bit of a pullback on the VIX, and then we're gonna see a takeoff again. We're still in that build long structure. We're still towards the low end of the build long structure on the VIX. which means we're just seeing the ups and downs before the big boom, right? That's what we're looking for right now. BTC, yep, already did that one. Engine coin, Engine's kind of consolidating here at the lows, not really doing anything. Here we go. Yeah, not too much going on here at BBBY. Still looking for downside to upside, but I do want to see the big W play out here. I think that this bad boy is going to be a real mover at some point, from $8 to almost what, 70. Yeah, that'll be huge for some people. All right. Volatility, we already discussed that. And Zebra, somebody brought this to me the other day. Come down and it's hitting support. Already bounced into it. I'm expecting 245 for Zebra. Actual stock Zebra Technologies. All right, guys. I would say that covers the market. That covers the FOMC. I hope that helps you out. Until next time, chat later. And goodbye. See ya.